Host Caleb Ogden. I'm here with your host GDT, who is a AI I've named Gamma Delta Theta, and So on this show, we talk about the order flow and what we're trading around, and just kind of like the market in general. So that's what we'll do today. We can talk about the action, which was crazy in the Qs and Microsoft, and the order flow, which had some kind of surprising names in there, and kind of how I'm positioning right now in this crazy market. I would describe myself right now as like maybe a paranoid bull. I'm getting more bullish every day, but I'm very paranoid and think that things can flip on a dime. And so I'm kind of positioned that way. And then the most interesting thing I'd like to talk about, if I can remember as we go through all this, is 0-day options, which is kind of a new concept and something I really only discovered by watching the order flow of the institutions. Apparently, let's see if we can get some stats from GDP. But I was going to say, apparently 40% of the market orders of the transactions on the market are coming from 0-day options. Like, that would be crazy if it's true. Let's ask GDP. This one's Gamma Delta Theta. How much volume do these contracts take in a given trading day of the total market? As of my knowledge, blah, blah, blah. Really, guys, can you just not say that every time? And why does the text have to come in so long and slow? Watch this. Say less. Say it again, just less. And still, you're going to include the 2021. Exact data isn't available. Make up a smaller variable portion of the total options trading volume due to their high risk. Let's Google that. 0-day option trading volume. Because I thought I heard otherwise. Yeah, now they make up 40%. Can you see? You can't see. Maybe you could see this. Nice. 40%. Anyway, this article basically confirms it, if you believe what Bloomberg has to say, which I think is actually where I saw the episode on it. So we have to hit a paywall, but we don't really have to hit a paywall because we could just look at this. Well, you can't see it. But yeah, now they make up more than 40% of total options volume. And I can verify, we can verify. Let's talk about the order flow. Boom. So, well, I did have like a whole thing to talk about with QQQs and Microsoft. It's all in there. Okay. So with, like if we actually look at the order flow, we can see so clearly a bunch of same day contracts. So all of these contracts on SPY and QQQ, these expire today. And I've been following these trades. They're pretty profitable. And I almost wonder if like what these guys are doing is just playing momentum. Like, why would you care? Why would you care if it goes up or down? You just buy into the momentum. And whatever the price momentum is, and I'm sure they built algorithms and things to help them gauge sentiment and, you know, put on these trades automatically or whatever using their systems. But still, just as a general principle of markets operating on momentum, these 0-day options are crazy. And what I would like to understand more is, when I buy a block of options, is there an institution out there that's actually going and securing 100 shares? Like, how do they collateralize that contract? That's what I want to know. Because if they're buying 100 shares, obviously this is a feedback loop, right? I think there are feedback loops happening in the market with, especially with the QQQ in big tech, and we see it in the action. So how can I show you this? Like QQQ was all over the place today, and so was big tech. It's almost like somebody, like I'm an engineer. I'm a retired engineer. Now I do trading, and I am retired. But these guys, it's almost like they're doing a refactor of the QQQ. So one of the things they announced was they're changing the weights of all the top 7 companies, which is kind of interesting that they've done that before. So I guess there's a precedent there. But anyway, it's having like an incredible impact on all these stock prices. So basically my thesis, or not thesis, but like my random fart in the wind idea is this is going to be a time of like a ton of price fluctuation. And I don't know, I think you could get some good deals. But so a lot happened today. So if we go back to the order flow, look at these same day options. Here's how it works. When I say, like, what does it mean when somebody's buying a 0-day option? That means that the contract that I'm purchasing, which has a premium that's lost if I don't exercise or sell the contract in its value, will expire today. So how these option contracts work is like a big part of their value is time. Even just 7 days, that's a lot of value. You know, it could be like triple the cost from 1 week to from an expiring contract to the next. Maybe it's double. But still, like the extrinsic value of an options contract is from the underlying price. If it's in the money, then it has extrinsic value. But it's mostly like the time duration, unless it's in the money. And so these guys are buying these contracts with like tons of premium. Look at this. Let's filter. Got to pop there. Okay. Yeah. So we got calls and puts on both sides. And so I think that they're just scalping the QQQ and the SPY every day and leaning into momentum. I don't know what's going on. Maybe this is all like some kind of, like algorithmic balancing, automated trading. It looks to me like people are just like dumping money into these 0-day options. Basically, the TLDR on all this is the smart money is YOLOing cash into the riskiest, highest return options every single day. And that YOLOing accounts for 40%. They now make up more than 40% of the total options volume. For the benchmark gauge, that's questionable. I don't know what that means, but whatever. It's a lot of options. I can verify it. We're looking at it, right? Yes. Okay. Garbage person. Sorry. So let's go to the flow. We saw a ton of calls on Microsoft, and it was, I swear to God, like before they announced their AI pricing model or whatever. Look at that, 95 million. They were the most called, way above Tesla, who reports tomorrow. Now, I can't remember what the data days are. I don't have that yet, but I'm sure we'll start getting a feel for it. But yeah, like Microsoft got called big time. And it was because they released some kind of like AI, whatever. But the point is, it shows up in the order flow. That's crazy, right? Like that's new information. That's totally new information. So why are they calling Cat so hard? 81 million. I like Cat. I own Cat. I own calls on Cat. Why? Because these guys bought them. And I think they're a cool company. So one of the things that I would like to ask an expert who understands the Black Skulls model really well, or maybe GPT could tell us, if I can even get to the question, is I option contracts, like the pricing. Anyway, we'll see if I can circle back to it. But the point is, people are YOLOing into these companies, like the Microsoft amplification today of 5%. Who's to say that's not from 40% 0-day options? Let's go look at it. So let's see how many option contracts today for Microsoft were expiring this week, in 1 week. Okay, so we can see it right there. Of all the call flow of this insider, of this options flow volume monitor, we see that the call flow is about 100,000. The put flow is 10,000. So super bullish on Microsoft today. Super bullish. Real-time information. Like Microsoft jumped 5% today. I watched it go up. I wrote it up thanks to these guys a little bit. It was a risky bet, but still, like these guys are doing these 0-day options and it does seem like they're gambling. So let's go expires in a week. So of the total call volume, it's exactly what they said. It's higher than what they said. 45% of all of the call volume was expiring options this week on Friday. And I bet a ton of them were expiring today on SPY and QQQ, which have same day expiring options. So that's pretty crazy that like all this call volume, like ignore the puts. Let's get that out of the way. It's like these came in right into close or whatever. That's just a little bit of hedging. Let's look at what actually happened, which was a lot of freaking calls, 87%. So calls out of the money. Let's see how many were in the money actually. What was that? Yeah, they're all out of the money. Look at that. So of the 46,000 calls, 37,000 were out of the money. So officially, what you're looking at, all this premium here was purchased under the idea that if Microsoft did anything but go up, all of this money is lost by Friday. That's crazy. Okay, and it's millions of dollars or whatever. Yeah, millions. So what are they doing? Okay, we got a $500,000 bet that it was going up $2. So spot was 358, strike was 360, another 500,000 for like a dollar, $2. Yeah, they're betting it like $2 a buck, $2 at a time, $4. And so I bet they're just taking that like 235K and they're like making it 242 and they're exiting. And then like they're, like shit. It's happening right here, like I think this is what's happening. And so then you have to ask yourself, what are like the amplification effects of buying a bunch of 0-day options at millions of dollars every single day? And what I wonder is maybe it doesn't even like distort the market that much other than it makes it like more volatile. Microsoft, what's the market cap? I think it's above $1 trillion. Oh, well, of course, 2.67 trillion. That's crazy. So it's up there with Apple. $2.67 trillion company moved 5% today. It moved 5% today. How did that happen? 5%. Are you telling me that all of these citizens of the world got together and like called their broker or whatever, got on the app and made the buy? No, that's not what happened. These guys are pumping up the price and amplifying it with 0-day options. Or I don't know. I have no idea how any of this works. But like I assume that if I buy a contract legally, it's got to be collateralized. What is it being collateralized by? At least a fraction of that block of 100 shares. It seems like it would have to be. I can't think of how else it would be. But whatever. My point is they have to have something. Cash, something. And so I'm wondering what are the impacts of options on markets generally, because that's kind of new. But definitely just like the growing options volume. I'm kind of thinking like, why would you ever trade stocks when options exist? It kind of doesn't make sense. The only thing I would trade stocks on is when I get bearish. So when I get bearish, I go from calls. I take my calls that are deep in the money. This is what I'm doing right now. Could change tomorrow. But right now, what I do when I get bearish is I exercise my calls that are deep in the money and about to expire, which I kind of always have. And and so yeah, like then I already have like this great cost basis because those are like contracts I've been holding for months. Um, and cost basis is good. But yeah, then I'll short sell them and or sell calls on them, I should say. Uh, and yeah, like I'll get that premium and then I'll buy puts. And so I'll short it from like I'll deploy the umbrella or whatever. I'll slow things down. I think of like selling calls. It really is it removes the equity and binds it into the contract. And so it really scales with the price from the time of the spot price. It's really important to know. You can lose a ton of your equity in a couple of minutes, you know, if you're not paying attention, but for sure in a couple of days. And so if you let those contracts just like go too long, just think of them anyway. Obviously you sell a call, it's a call in the other direction. So these guys are calling like a dollar or two out of the money and making who knows how much, 500K. Hey, Microsoft closed, I'm pretty sure like at like 360s. Let's see. 360 almost. So all these didn't really anyway, it was up 5%. Like I actually think everything kind of fell into close. But why did it fall into close? This is what I'm talking about with distortions in the market. I think there's a ton of them. I think it's pretty easy to manipulate the markets. And so one of the distortions that I think is happening right now is caused by the refactor of the QQQ, who's doing like redistribution of like they're reallocating things. And so they're saying like Apple can't be 10% or whatever. They got to be 5%. I don't know. I'm barely watching it, but I am watching the action. And yeah, like I'll find a way to show you guys this in the fullness of time in an easy way. But like all of the big tech companies were kind of trading together and they were diverging from all the risk assets. The risk assets were going up and to the right basically all day. Like every time they dropped, spiked back up. It was crazy. It was crazy. And then this is what I'm talking about with like Paranoid Bull. Are we still broadcasting? Nice. Okay, so all these guys are calling right out of the money on 0-day contracts. That has to have an impact. I think I heard from Bloomberg that it does. And for sure it has an impact because it's 40%, 45% of the call volume of at least on Microsoft. And so I think what happens is somebody gets a text right before the article is released. They text the broker or the hedge fund. Within 5 minutes, everyone knows, but then everyone's watching what everyone's doing. There's like an amplification. I don't know. I bought all these contracts and they paid like pretty well. And same thing on the QQQ. And I don't know about technical analysis. You could consider it gambling. It certainly is. But like, I'm just saying like these people, first of all, like what's the worst thing that could happen is I would probably roll whatever I have left in time value into the money and pick up some, Microsoft if the price moved against me. It's a great company. But if these guys are buying all of this and they're the ones that have the best tools and the highest quality information in the timeliest manner, like to be properly informed is not just about knowing, it's when you know. And so these guys know the most, the fastest, and so they're going to be best able to make judgment calls and decisions. And so, like, why not follow their trades? Why not follow their trades? Why wouldn't you? And that's why I have a cat call on. I picked it up today. And so, yeah, let's talk a little bit about order flow. We got stuff to do, but I do have a Coke here, so we can keep going. It would be nice to have water. Anyway, where's GDT when you need it in person? So Tesla, we have earnings. Traditionally, it's fallen after earnings, like basically every time. I bought puts, why not? Like you shouldn't in theory, because like I'm buying what these guys are buying, which is contracts that expire at the end of this week. And so if the price goes up, those puts get nuked, totally. And if the and also the implied volatility of companies tends to go down after earnings. Although I don't think always, like in the case of Nvidia, I doubt that it went lower. And so, what are we saying? Tesla, yeah, like there's a not a phenomena, there's just something that happens with option contracts where you can lose a ton of the value of the contract if you bought it when the implied volatility was really high, and then that IV drops and the price of the contract can fall in half. And that's called IV crush. And so that's what that's the risk that these guys are taking every time they're buying these 0-day contracts with millions of dollars, $500,000 at a time. Now, I guarantee, like they probably hit sell, but like I guarantee there was a period of time where that 500,000 was probably worth 1.2, 1.8, something like that. Did he sell it for 1.2? What do you do with that? Like, that's crazy. And so it's all just like scale, right? It's all just decimal places. And so we cat called a little bit today. I wonder what's going on. I couldn't find anything in the news. I don't know what's going to happen with Tesla earnings. Like, it seems like people always find a way to take them down, but I kind of feel like they won't be able to, because like this market is so strong. It's crazy. So we can talk more. Let's keep going and talk about a couple of their names. So I watch a lot, ARK and Coinbase and Robinhood and who else do I watch? Like Snap, Tesla, Zion, Netflix, a lot of those. And for all different reasons. And so each one of them kind of has crazy strength. ARK has been like flirting with 50 for like weeks. I don't know, like a long time. Coinbase has held like basically 102 was the lowest print I saw. Crazy. Not really, but compared to like a week ago, crazy. Robinhood is just like grinding, like it's just like pumping a little bit every day. It's like the little engine that could. And then you got Tesla. People are just like, I got IV crushed on Tesla a couple times actually. But, this is what I love about options. And this is what I love about trading in equity versus in margin. Although I do use margin for different things. But like with an options contract, if you do get IV crushed, there's always a way to like buy a ton of equity. Now you're going to have to probably buy, closer to like $1,000 at a time or whatever. You could be 10,000. Just depends on the price. And so of the underlying, but yeah, like I'll have to find a way to explain this more. There's a lot more, your dollar goes obviously a lot further. And I think there's a way to like go long with contracts that you do pay a large premium and you do burn a ton of premium, but like you want to expose yourself to that volatility. I think. And so I'll circle back to that when I have better ideas. So yeah, I talked about being a paranoid Super Bowl. Uh, like I am getting pretty super bullish just because all these companies have so much strength. It's crazy. And then let's look at the dark pools. Let's see what we had. 2.3 billion. Boom. That's what I'm talking about. Look at that. That's crazy. 2.3 billion. 2.3 billion. Okay, so like there's all this. One of the things that people have been talking about is how there's all this cash on the sidelines, like record levels of cash, record levels of cash. I bought a contract today for 30 cents just to, for my own feeling of it or whatever. It's probably going to expire out of the money, but I had to buy it because at one point in time, I paid $1,200 for that contract. It was years ago. And so today I bought that same contract as it gained like 8% of value. I bought it for 30 cents. I previously paid 1,200. It's the relationship between price and value. But that's like with these contracts, it's interesting. It's interesting. Anyway, going back to like this $2.3 billion print, they say there's a ton of cash on the sidelines. They also say that the market is at record low levels of volatility. Are they connected? I have no idea. I didn't even know how to find out. Are we streaming? Yes. So, yeah, I don't even know how to find out, but we are seeing like this print 2.3 billion coming in to the market, consistent heavy chunks. Look at the trend line. That's crazy. So that's the last 2 weeks. And the thing is, it's so consistent. And that's why I think people are just like buying indexes. And that is why I think there's a feedback loop happening between the Qs and the big 7 and whatever, big tech, the good ones, the ones everyone likes. There's a feedback loop happening there just naturally because of like owning the popular ETFs and owning the companies that are in that ETF. And also all the 0-day options I was talking about. So there's a lot going on. It's crazy. But point is, there's still a ton of money out there that's not invested. And they're like in bonds and whatever. They're in things. And so like we see this money coming into the market, and then we see this order flow, and it's basically bullish every day. And it's like getting more bullish. Look at this. 60-40, that's really bullish. And so, yeah, we could talk about a couple names and look at them. Let's start with Tesla, of course. So super bullish, 80-20 on calls, looks like somewhat, not all expiring out of the money. But again, let's look at this. Okay, how many expire this week? Oh my God. 40 of 60,000. That's crazy. Okay, so it's all 0-day options. Hard to believe. It's not hard to believe, but like it is just shocking to find out that all of the options volume is people buying the riskiest fucking contracts that exist, where you're most likely to lose your money unless the price goes exactly as you think it will, which means they probably have either information or something is making them place that bet. And I have followed along with a few of these, like I said, and they pay. I took a screenshot. Let's see. Oh, am I not streaming? Shit. Damn it. Oh, okay. We're streaming. Let's see if I can find a screenshot. Yes. Boom. So this is like, hopefully you could see it. 273%, and I sold way early. Like, I sold really early. And it's just like a small, what was it? It was like $100, whatever. Like it's more just the theory of it that matters, that it's even possible is crazy. And what these guys are doing is they're not like buying one contract, they're buying millions and millions in premium. Pretty shocking. So we have like these crazy market dynamics and like these dislocations where I don't trust the price of any of these big tech companies right now. I think there's massive manipulation happening, and I will definitely be looking to buy any dips, to be honest, until, even if something changes, I'll just, buy puts. And so really, it's really what you do. And sell calls. That's what you do. I go from contracts to shares, and then sell calls, and try not to get crushed when things change. But like, you really do have to trade the momentum. That's one thing I've learned. You really have to trade the momentum. Like, why? It's like spitting into the wind. I guess you can do it. Like, why? Why wouldn't you spit with the wind every time? Anyway, you have to kind of make your investments, even if you're dollar cost averaging, you don't want to be dollar cost averaging into the wrong direction. But anyway, this is like what I think about is a active trader. I'm not like that adept at it, but I do like make a lot of orders every day. Anyway, so like there's all these possible dislocations as I see it in the market. The reason I think that we might be in a new bull market, and also I do believe that every technical indicator shows it. So I don't know how you define it, but like, seems like, yeah, obviously, is what? One of the reasons I think it can be sustained is because all of the money on the sidelines has to come back into play at some point. And if the market is a forward-looking instrument, as our friends at ARK love to say, ARK Invest, is a forward-looking instrument, then it's going to predict it. It's going to predict not just the end of interest rates, but their reversal. It might predict it wrong, but it's going to try to predict it. And it's hard to see, like, if inflation really is trending in the right direction, then, like, I don't know. It doesn't even matter. I don't even think interest rate matters. I think that everyone gets, adjusted to it, whatever it is. I think what really is going to disrupt is the government and the institutions. Everyone else is just going to keep building and doing and producing. And so, like, what's going to matter, as always, is earnings, like the numbers, how many users, what is the time in app, what's the revenue per user, how do we boost ARPU? That's the kind of shit that matters. And over time, that's the kind of shit that, like, really fucking matters. So all of that is kind of like, I think, creating an opportunity, whether it's the QQQ refactor or the 0-day options or whatever, to take advantage of some short-term price action, but then to try to use that premium to buy deep equity in pullbacks. And obviously the trick there is you need to, like, it's an options contract that you're going to pay a ton of money just to roll it. So it's really expensive just to roll it. And but the thing that makes it worth the money is if you can actually hit the bottom, to some level, then yeah. And the better you are at that, the more likely you are to have a return. And the worse you are, the more likely you are to burn a ton of money on premiums. So anyway, that's what's going on with the markets. And all these names, look at a couple more. NVIDIA, I got burned on today. I followed them into their 0 days, and I bought a couple, And it just moved against me. And I was like, this thing is too fucking high. It's crazy. Like, sell, sell, sell. Instantly spikes. Fucking lost. Anyway, I shouldn't, like, why? This is what I'm talking about, momentum. It doesn't matter that they're worth more than Tesla. It doesn't matter that they're 1.1 trillion. Like, what matters is what the market is doing right now. And it's the same thing with, like, why you should try to find some way to protect yourself. One way to protect yourself is to be your own insurance and just to pay a ton of attention to it. It's not foolproof, but it is cheaper. It's manual labor, but still, like, and what you really should do if you want to be able to sleep at night and not have to worry about things is buy puts that capture like black swan events. So, like, just pick the number that would make you shit your pants if you ever saw it, and buy puts at that level as far out as you can afford, hopefully a couple of months. And so, like, if that's half the price, if that's 10% down, whatever it is, like, you buy your puts at shit your pants as far out as you can afford, or that makes sense. And then you can know that no matter what happens in the fucking universe, as long as the market still exists, you'll have at least that value that you can, recoup. So Nvidia's crazy. Microsoft, we already looked at. Netflix, like, had the same thing, spiked. Tons of calls. I don't know. I couldn't keep my calls. I had a couple. They made a little bit, and I sold them. But I am following these guys into these trades, and this is what they're buying. They're buying. That's why I think, like, when people talk about the narrowness of the market, well, this is why there's no breadth. It's 0-day options. It's a bunch of hedgies fucking pumping their pockets, and just, like, it's a pump and dump. It's a pump and dump, and retail's going to get dumped on. Now, not us, because we're going to sell calls and fucking short the shit out of this when the reversal happens, which will show up. The technical guys will be able to spot it. We'll find, like, the sentiment will change, and we'll be watching it live on Nvidia, I mean. But yeah, like, sorry guys, I don't know, like, either if you're worth 1.1, Tesla's worth 1.6, 1.2.2. I don't know, like, a lot. I don't know, like, Tesla, you crazy? Maybe the world doesn't see what I see with that, but I see a lot of high volume fucking robots built at scale that are as good or better than the iPhone at disrupting a given platform. So one could be cars. Anyway, there are a few uses, but it doesn't even matter because the only use is the Tesla bot. And that's how they make all their cars, right? They replace all their engineers with Tesla bots. Not really. Each engineer runs an army of Tesla bots, and the whole world gets covered in gigafactories, obviously. So we're pretty bullish on Tesla, but it's crazy that Nvidia is like over the value of Tesla. That's crazy. So the ride down is going to be epic and good. And I think that's the kind of thing where, like, if you bought puts right now, this might be a really good time to actually buy long-term puts at, like, a reasonable price, let's say $350. And that's funny, strike 350. So what was the price of those? Yeah, 120. That's crazy though. Wow. I mean, that is called going long. So this is what I'm talking about with options. You could buy a ton of deep equity. So instead of just buying shares, which is like, oh, cool, I got some shares, fucking shares. Like, this guy bought deep equity without having to pay the full cost. I guarantee his delta, which is like the Greek for how much the price changes relative to the underlying price, is as delta trends towards 1, the price will change 1-to-1 with the price of the underlying. As it trends towards 0, the price diverges. So anyway, this guy's like, basically, I think he's doing what I'm saying actually, which is like, the price is 350. Like, but we're super inflated and we're going to pump this for a bit. So I'll hold on to it for a week and I'll turn this 1.9 into 2.2 along with everyone else. And that's how we'll pay for the new office or whatever, I don't know, whatever these guys buy with their premiums. And so I think it's pretty fun to follow these trades along, which I never would have done if I didn't know that they were doing this. It's new. I don't really know how long they've been doing this. I discovered this 5 sessions ago, and I'm trying to understand it. And so all of this is brand spanking new information, if you know what I mean. So let's see. I doubt anyone had action on Zion. I'm the only Zion lover out there. But I live in Salt Lake City. Hey, look. Oh, wow. Yes, we got Zion calls. Wow. Amazing. And not that crazy. It's definitely not that crazy. So what did they buy? Oh, I'm jealous. Shit. I'm jealous. These are some good calls. Damn. I wish I placed these. So this guy's basically saying, the price is going to jump. It's going to be $40 within a couple of months. And he's betting 35K on that. That's a pretty good bet, I think. Yeah, I might copy that if it's still cheap. This guy's saying 55. That's a pretty good bet too, actually. I might go into a couple more months out, but that's cool. Anyway, these are just bets that the price of Zion's today is $32, which is already quite elevated compared to where it was. These guys are betting it's going to go up $10 and by October. But normally we don't see a ton of action on Zion's. So let's see. Of course, Coinbase is going to be pretty freaking bullish. It's crazy. Pretty bullish. I don't know what to do with Coinbase. This Coinbase is how I really learned about the consequences of selling covered calls. That's where I really learned it. And yeah, it really is. You just got to think of it as the equity is removed. It's gone. It's actually it's not that it's gone. It's anti-equity. It's magnified against you or whatever. That's why it's so important to get rid of your sold calls as soon as you can. Assuming you even sell them to begin with, which I do for different reasons, partially just to, get paid to take a little risk. And so that's what these guys are doing on Coinbase. But yeah, I think we're rightfully a little bit mixed on sentiment here. So Hood, Super Bowls, what are we doing? We're betting September, August, 13, reasonable. This guy's saying 20. Okay, so this is what I'm talking about with these contract prices and why there's no volatility. So I've been wondering, how can there be record low levels of volatility? I don't really know how this stuff works because I'm kind of new to that even concept of volatility. I'm wondering if it just measures puts. If it does, that's a pointless index, a pointless measure. What I want to know is what is the option and total trading volume and however you would measure volatility, bid-ask spread, time per day. I don't know, however you do that stuff. And so these contract prices are so freaking cheap. I'm wondering if it's because all the money is on the sidelines and these prices are still down 70% of where Robinhood IPO'd. Maybe it's down 50, no, 60 something. Anyway, so they're down a ton. They're down a ton in price, but it's not just the price that is making these contracts more cheaper, that are making them the actual price of the contract is so low, incredibly low, is that I think that because there's no volatility, implied volatility is super low. I don't know. I wonder if there is an opportunity with these long-term contracts, 2025, to take advantage of the money coming back into the system, which is going to increase overall volatility. But I guess it wouldn't. I don't know how that's calculated. It seems it really depends on I didn't even know how they make money on that. So somebody, when you buy an options contract, like, anyway, we'll have to talk about that later. I'm an expiring option. This option for today is expiring. I gotta go. Like, thanks for watching, for hanging out, for sticking around. I'm gonna do this a lot more. And basically, I just want to watch the watchers, and let's look at the flow sentiment, put to call ratio, see what people are buying. We'll do a quick scan and filter out ETFs, because let's see what people are just buying. I kind of like just looking at calls out of the money. Speculator, sure. We can do it in the money too. Why not? Let's just do all the money. And then let's do bigger bets of like 20. Yeah, like 5K actually is. We'll do small bets also. That still has QQQ. No, I only want stocks. Okay, so people are buying Tesla, AMD, Bill, Palantir, ABB. What are they buying? Square. Buying some Home Depot. Buying calls on Home Depot. Why not? Why wouldn't you buy calls on Home Depot? Like, okay, buy puts as well. You know, long-term puts or whatever. But yeah, like, that's the whole point. Is I think there could be an opportunity for, like, not an arbitrage, but just to benefit so like if you buy an options contract further into the future, it's going to be more sensitive to a change in volatility and implied volatility, because so much can happen between now and the future. So it magnifies whatever, like, the volatility could be, that contract magnifies it. So basically the sensitive contracts to, like, a change in volatility would be furthest into the future, deepest out of the money, because it's the most uncertainty. There's a measure of it, it's called Vega. It's the most uncertainty of all the existing option chains. I think that contract would benefit from the most from a spike in implied volatility, which is why you would never want to sell calls at that contract. Because if the price ever gaps up, you know, you're going to be on the hook for that. Like, and the extra premium that comes from the high Vega and the high increased price from the implied volatility. So anyway, we got calls on Meta, we got calls on Oracle, whatever. Cat, we got cat calls. Look at this. Rapid succession. Cat calls. So what are people calling it? Like, it's this week. They're basically just betting it's going to go up. Whoa, no, people are buying deep in the money. Wow. What is this about? This is different kind of action than I've seen. I wonder why they're doing that. I wonder what that advantage is. So basically, right now, CAT is trading at 263, and these guys are buying a ton at like 230 to 250. So basically, they're paying a lot of premium. It's really equity, but like, you can lose it if the contract, you know, loses value, to buy their strike down to 250. So they're getting like basically a really high delta with that. And yeah, like, and it's like a pretty secure state. Like, it's going to expire in the money for sure. Like, it's going to expire with value. So they could lose value if the price goes down, but they're somewhat protected by the high delta, and the deepness in the money. Yeah. So I think I misspoke about the delta, but I can't figure it out. But anyway, like 230 to 250 is about the strike that they're buying into the money, which is, you know, whatever, $10 below, we're trading at 10 to $20. And these are big premiums. Wow. Okay, so like, this is like a whole like little news story we got. What is happening? What is happening?
Okay, so I haven't seen this. This could happen all the time. But somebody's buying blocks of 1,600 options for $5.5 million per block, an institution, and they're buying the strike at 230. Wow. And then they're repeating that same buy at 210s for about half the volume, like 2.7 of premium. And then again at 250. Wow. This is like very regular buying. If you were like listening to this and couldn't see it, I assume everyone could see it. Yeah, nice. This is like really regular buying. So anyway, maybe this happens all the time. I'm new to this platform, and I'm definitely new to like being able to watch what the smart money is doing. And that's a pretty fun thing that we get to do on this show. So the things I'm going to be watching is I'm just going to stay vigilant and get ready to put all these companies in their place as soon as the market turns. But I'm wondering if that's not going to happen, because I think we've already surpassed every key technical indicator. And really, these hedge funds, they don't care, like they don't have bias. I really think, are just buying momentum. Like, why would they care, right? They just want to make money. And so if the price goes up, you buy calls. If the price goes down, you buy puts. Who cares? And so that's kind of what I think they're doing. And if all of the technical indicators have reversed, then we're going to see the opposite momentum. And how many bears are going to get burned out, like from shorting a bull market? Like, that's how you get fucked. I've done it. And so anyway, we'll see. I have no idea. But it would be pretty exciting if the market, as a forward-looking instrument, had actually made a deterministic, had like made a prediction or whatever that turned out to be true. But I think the market, like anything, can get things wrong, can have false starts, can be too early. So maybe there really is a spike in inflation, not like a gerrymandering of numbers. Like maybe there really is like a real thing that happens that requires not just like interest rates, but like even more interest rates and higher. It's hard to see how the government can pay its own debts if it does that. How are you going to pay your own debts? But whatever. I'm not saying they couldn't. They can just do whatever they want, the government. But still, like, it seems like it's going to be more, of a cost than it would be worth to impose that on the system, rather than keep things stable and have them propagate through time. And so I think that, and then have the impacts happen. So I think what the market is predicting is like, okay, whether it's 1 or 2 or even 3, whatever, like we're basically almost at the end of the rising cycle, which allows us to take some new level of risk, which I think would be immediately withdrawn if there was any kind of sign that there was a deterioration, or of course like a global event, black swan, blah, blah, blah. So I'm kind of moving back into calls. I'll just be transparent. Like when I start feeling scared, like that things are going to like about to collapse, like if we're going to gap down, basically, if I think that the next day can gap down, then I will exercise a contract and acquire a bunch of shares on the cheap, which is like from a contract that I've held for weeks or months. And then I'll immediately sell calls on that and use that premium to buy puts. And now I'm like double protected. Like that's max fear. And of course I make sure to do that before the trading days close, because then you want to be protected from the gap down is how they get you. And so, yeah. But I don't think that's really like in the picture. If you look at the overall sentiment, it's pretty like 60-40. That's crazy. We see all this like dislocations and QQQs in the big tech companies. I think it's going to be, as usual, like an earnings driven everything. And let's look at the numbers, right? Let's see what these guys have been up to. That'll be a fun thing to see this week in Tesla, Netflix, and who else? Zions and a few others. American Airlines. I put a little bit there. So thanks for hanging out, for being an insider trader. My name is Caleb. Like I said, I'm a retired software engineer, and now I do this. And I hope to be doing it for a long, long time and doing cool stuff. Like one thing I thought is like maybe as a way to like just hang out, and anything that I share that is of value. And if anyone ever wanted to say thank you, you could like, instead of tipping me, I could wire up something where you could like buy me an option contract. And it would be like live in the live stream. And then we could have a thing where like literally you just press a button, and however people get tipped, I don't know how it works, but like there's got to be an API for that for Twitch, right? And whenever that happens, literally buy the contract, get the price, and pull the price so you can see it live changing on the screen. That kind of stuff I think will be really fun, and I hope to be doing party mode and hanging out and not just ranting and like, you know, getting some like feedback or whatever in the future. But for now, everything I've got to say is like the action's crazy, dislocations everywhere, things are trending in this like new bull market, and 0-day options might be amplifying everything to crazy levels. But I'm learning about it. We're all learning together. Thanks for sticking around. Bye.